It's the Friday's edition of Business Incorporated. Thank you for joining us. I'm Chimezi Obi Iwago. On the show today, Moody's places South Africa's MTN on review for downgrade. And Kenya cancels import license for fuel dealers over strike. And in Morocco, the Blue City draws tourists in. Let's get the show started now with the markets. And positive sentiment returned to the Nigerian equities market at intraday, with the all-share index up by 0.13%. The South African JSE index came down 0.33%. Egypt is closed for the weekend, and Kenya was down 0.29% on Thursday. In the Middle East, the weekend started on Thursday, and so the markets are closed on Friday. However, sentiment was low as only the Dubai financial market closed up 0.29% and others tilted southwards. And in Europe, shares were mostly mixed on Friday morning as investors remained cautious amid new trade threats. Ulrich Bartz has more to tell us. Let's cross over now to Frankfurt. Good afternoon, Ulrich. Thank you very much for joining us.
Good afternoon. My pleasure.
And what a Friday with U.S. payroll report and, of course, the expected announcement on new $200 billion trade tariffs against China. How is the day shaping up so far?
Well, the trading is basically stalled. The U.S. labor market data just came out. The private sector payrolls going up by 204,000 in the month of August. And when I look at the DAX behind me, that's the best indicator of the immediate reaction. While there's hardly any reaction, there's just a tiny little scratch upwards at the end of the barometer there on the big board. That may change in the course of the day, especially as you mentioned China. If there is any news that's being confirmed that the U.S. will be slapping tariffs on now $200 billion worth of Chinese imports to the United States, to which the Chinese would then retaliate, as they say, then likely you'll see a market reaction, perhaps a sharp one, even though people in the market have been talking about that for so long already, and there's been much market nervousness and reaction so far already. But with the news, expect further reaction here.
And still talking about trading today, shares of British Airways, our parent company, IAG, was down some 4% in early Friday trade as the airline reported a financial data breach of hundreds of thousands of customers. Should BA flyers and other airlines be seriously worried now?
Well, it shows that the convenience in the internet can come at a cost, and at this one, it comes at a cost, the loss of data, and perhaps also financial loss. British Airways has promised to compensate affected passengers. In that case, how exactly, we don't know yet, and it will depend on how, of course, British Airways actually makes good on that promise. And that's where the danger lies for the airline. Perhaps that's also a reason for the share going down. I don't think not the fact that the company was hacked or the credit card information was hacked. Basically, it can happen to anyone, and it has happened to a lot of other people as well. But we hear reports that initial reaction from British Airways, well, there were some remarks that it took its time informing passengers, and then when passengers tried to contact the airline, they weren't tremendously impressed with the reaction. So British Airways has to really react well, timely, and in a complete fashion. Otherwise, it may stand to lose some passenger satisfaction from this event.
All right, let's look at the data coming out from Germany, and that's industrial output, which started the third quarter on a weak note. Now, using the negative 1.1% reading of July as the rear view mirror, give us a look ahead of view.
Yeah. The look ahead is especially important. We know that the data so far has been tarnished by the trade dispute and investors' nervousness, businessmen's nervousness. It hasn't really affected current business all that much, but it's served to make people think longer about investing. And that, of course, translates later into a time lag and possibly less business than before. It may seem prudent at the moment, but it may come at a cost. And if indeed, we talked about China and the US already, if that comes, then it'll seriously affect those relations. And because Germany's two biggest export customers, single ones, are the United States and China, then you have a big problem in Germany and, of course, in the European Union as well.
All right, thank you very much for your time, Ulrich. It's been a wonderful week with you. Enjoy the rest of the weekend.